Alrighty, this is Daniel with Daniel's Bullion Coins, and I wanted to wrap up a video that I did the other day talking about the inflation and goods and services and the dollar going down. This is just a quick wrap up, and we're going to go into something else. What I've got here is inflation, your dollars, the price of things, and goods and services here going up, and I've got the dollar going down. The dollar's going down in value, and your stocks are going down in value. So it's dollars losses times stocks losses. And one of the things that I wanted to mention in this video is that the distance right here, they say, is stronger. Well, is it stronger if the dollar's going down and the stocks are going down, your savings are going down? No. They say it has value because it's better than the yen or the lira or these other currencies. But you can see that that's getting wider. I've drawn that so it's getting wider to show that it's getting stronger, quote unquote, and having more value, quote unquote, but in reality, it's going down. Over here in green, this green arrow, I've got tangibles, gold and silver. Tangibles can be whatever you would like. It can be food, farm, whatever is going to survive a collapse. Beanie Babies, stamp collecting are not going to survive, so that would not go in tangibles. Stocks, ETFs would not be a tangible. The price here in green for tangibles was actually below the stock market. And this was a great time to get in when things were low. And it's still a good time right here. But the price is about to skyrocket and find fair value up here. But what I wanted to talk about was something that I had forgotten in the last video, and one of the subscribers, Paul, he had asked the question, so I thought I would wrap up the other video with this. He asked, when do I sell? The best thing to do is look at history. So we have the 1960s when we had silver currency and goods. They all lined up. Everything was fair value. You worked all day digging silver out of the ground. You worked all day panning gold on the side of the river. You traded your time, your labor, your energy for food. And that person who ground the wheat and made the bread traded an equal week's worth of work for an equal week's worth of work. We had fair value right here. Silver was tied to fair value. So we got off of that, and we got into the wars. We spent money on the wars, and the inflation and all occurred right here, but the value separated from the price of the gold and silver. 79 and 80, 1979, 1980, we had inflation. The latter years of Jimmy Carter and the beginning of Reagan. And the price of this is the price of silver and gold right here. It caught up and equaled again and found fair value right there. And that was the time to cash out. Silver got to $50 an ounce. That was the time to get out. I know there were some anomalies with the Hunt brothers and all that, but it's still, when it got to fair value, that was the time to get out. Then we had the Enron crisis in 2000. And the stock market and the gold and the silver found fair value again. And that was the time to sell the and trade into something that was that goes up, inflationary. You can get into the ETFs, the goods and the services, and ride those things up. But you have to find out when is the time to get out. So we progress a little bit further to 2000. We're going to go to 2008, 2009, somewhere in there, to the housing crisis. And we're going to talk about fair value here. The gold and silver in red right here, the price got up to about $2,000. The goods and the services, or the Dow, The Dow got to 6,000. It's just 6,000 on the Dow. That's not a dollar sign, sorry. 6,000 on the Dow. All we had to do was go to 4,000, $2,000, $4,000 for gold, 4,000 for the Dow, and we would have been at fair value. They would have equaled. But we intervened right here with 0 interest rates. 0% interest rates. And that stopped the correction. So we never really found fair value there. We never were able to pull that extra money out of the system because we began to plug the holes in the dam with 0 interest rates. And we've essentially been 12 years at 0 interest rate. We've tried to come up a couple of times, half a point, a quarter point, whatever, but the market began to teeter and we went right back down to 0 again as quick as we could. So the question, back to the question, is when to sell. And here we are, the price of gold and silver right now, it's $1,800. That's the spot price. That's the paper price right there. And that's this right here. So I'm going to continue it out just a little bit. And you can see that they're starting to separate. There's a little bit of distance right here where the actual coin is beginning to separate, and it's 2,000. If you want to buy a coin, a gold coin, you're going to be at 2,000. So that's a $200 separation right here between the paper price and the coin. We call that unhooking. It's beginning to unhook. As it begins to unhook, these people down here in the dollar, they're seeing what's happening. They're seeing the gold start to run away. They're seeing the inflation, and they're down here with all of their savings. They're wondering how they're going to retire, how they're going to make it. And they begin to take their dollars. They begin to take their dollars from here, and they begin to head right up through here. And as these trillions of dollars begin to realize what's happening and go to gold, it's going to keep going until it finds fair value again. Now, the Dow is at 33,000. It was. That was its high. Gold coins are at 2,000. The spot price is $1,800. $200 separation where we're unhooking. Somewhere these two are going to meet. Is it going to be at 10,000? That's $10,000 for gold and 10,000 on the Dow. That would be deflation. If it's 30,000, if we go up here and we catch 30,000 on the Dow and gold is 30,000, that'll be inflation. We don't know which one's going to happen. But when these two are equal, whatever number that is, that'll be the time to sell. That is the answer to that question. Now, I wanted to go into one more area to talk about tonight. Let's see if we have enough room on this paper to talk about one more thing tonight. And we want to talk about fair value and natural gas fertilizers. So, in order to find fair value, we need to take into consideration the fertilizer. Okay, fertilizer nowadays is done with natural gas. And we extract fertilizer from natural gas. It's a chemical process. I'm not going to get into all of the details of that. To grow corn, to grow chicken, the meat, everything is accelerated with natural gas, whether it's the feed, or we've also altered the seeds with non-GMO, all of this type of thing that we've done to take us off of the natural situation to raising a chicken. Let's use a chicken as an example. So we have the 1960s here, and we're using a chicken as an example. back then in the 1960s, 25 cents would buy you a chicken. That's a silver quarter right there. And that's when we had fair value. I showed you on the other chart, we started out at fair value in the low 60s, 1960s. Let's divide that down into 25 units. We'll call it 1 penny. Just call it a penny. Pennies. Sorry. We'll call it pennies. And then we're going to look at today, 2022, in chicken. And if you want it, all you can really find today is like a non-GMO. You're not going to find a totally organically grown chicken. And when I say organic, I mean the feed was grown in manure, natural fertilizers to get the wheat and the barley that's then mixed to feed the chicken. So the best you're going to get is a farm-raised chicken, and that's going to cost you $25. Okay, let's break that down into 25 units of $1 bills. Okay, now what we want to do is we want to find out what the value of that silver quarter is, and we're going to use the chicken as an example. So if a dollar is $25, there's 25 $1 bills in there. Today, $1.40 $1.40 equals 1 ounce of silver. Okay, that's the 90% silver. That's your dimes, quarters, and halves. So if I take the $1 and I say the silver quarter through the chicken, it's $140 for 1 ounce of silver. You see how we did that? If it's 25 units of pennies, 25 units to equal the chicken in silver for a quarter, and the chicken now, the farm-raised chicken, as close as we can get, is $25. You go buy a true farm-raised chicken with non-GMO feed, still has the natural gas feed, it's $25. $1 equals 25 cents, 25 units. So now we can say that $1.40 equals 1 ounce of silver. That's $140. One more variable. In order to have the chicken eat all natural manure grown feed with no natural gas growing the corn, you would be at $50. How do I know that? Because on our Peace and Plenty Homestead channel, we raise chickens and rabbits on all natural feed, and we process them and we can them. And by the time we do that, the labor and the energy involved to do it with absolutely no fertilizer that's natural gas, it's all manure fertilizer, that jar is worth $50. So now the 25 units is $2. That makes the value of the silver at $280. Now, I know that's a shocker number for people, but go back to the other chart that we did earlier. Where is fair value? You see the energy price rising. The natural gas is the energy that's created and given us this opportunity to get to where we're at. And once we start to look for fair value, I believe fair value for a farmer to raise a chicken without the energy, or for the energy cost to be what it really should be in silver terms, we would be at $280 per ounce. Now this is just one calculation that I'm doing here tonight. I've got several other calculations, and I always come up with a 3-digit 200, 250, 280 number. But for today, this is the one we did. I appreciate Paul's question. Best time to sell is when the gold is on par with the Dow. That is fair value. Thank you everybody for watching. Please put your questions and comments in the comment section and I will answer them. Thank you now.